Me on.
Thanks for being here. And let's start off with what's going on with real estate. We see out in Canada, is where you are, we see real estate like the bubble is starting to pop. We see it in Australia, Europe, the United States. We're starting to see signs that real estate is heading in the southerly direction, downward. And I wanted to get your take on what is happening with real estate. Why all of a sudden is real estate starting to decline?
Well, essentially, we've had a state of euphoria that has been present in many major cities across the entire world. Some are worse than others, obviously. In fact, Toronto saw the biggest bubble throughout 2017. It peaked out in April of 2017. The prices were so high at one point that people were literally standing outside of homes with their real estate agents in order to have multiple bid offers on a property. So you could not even place your offer through traditional means. You would call the real estate agent. That's how hot things were. You had lineups of people going on, to line up for new condo developments that were happening. In Hong Kong, you can see literally real estate agents beating the hell out of each other in order to try and get a new client. This is the state of euphoria that we've experienced here. Now, as these prices in certain areas have come down, it is directly correlated to the expenses people are paying. There's no possible way that they can afford to pay what they have been, have to deal with over the next little while, because you can see where interest rates are today. They have included new stress test measures on individuals that says basically if interest rates do rise, are you able to afford them? And the answer is no. That's pushing more and more people to alternative mortgage lenders. They are higher risk, considered to be higher risk. And this ultimately puts a further burden on people because they don't have as good rates as the traditional lenders. So people are going to be overburdened. They're seeing that. They're saying, hey, you know what? Let me just wait it out a little bit. I'm going to just to see what happens with the market. I've been told interest rates are going to rise. I'm a little scared. Let's just wait it out. So they're sitting and waiting. So the inventories are piling up in many of these areas. But if I look at an area like San Francisco, for example, sure, prices have been rising and there's no stopping that anytime soon. That probably will be one of the last ones in the US to pop. I look at Manhattan, I've seen that those prices have come down a bit. You've seen 54%. I just did a video about this. 54% of the properties that have gone on sale have been under the asking price, and 37% of them have been at the asking price, but the asking price had already been reduced. So pretty much all of them are selling for under what they initially list for. So we can see that this is declining, and I do believe that interest rates and uncertainty is playing a big role in this.
Do you think a lot of people are going to, since the buyers are saying, I'm going to wait a little bit, what about the sellers? Do you think they're going to start taking their houses or condos off the market because of this?
Many people do that. However, if you just speak to your real estate agent, generally they'll be able to tell you exactly what it was listed for, how many times it's been on the market and off the market. So they're not necessarily going to fool anybody by pulling it off the market and trying to put it back on 3 months later. I think that is happening. It does, in fact, occur where they just pull it off the market and they say, hey, we'll just wait it out and we'll see. But the conditions aren't going to get better. Of course, they'll just get worse. So I don't know exactly what their thought process is. I would suggest if you're going to be selling, just sell it now and take it or leave it.
I wanted to move on to the Fed and what the Fed is doing right now with its balance sheet. And what's very interesting, they're doing a couple of crazy things here where they decided to discontinue the Fred graph of their balance sheet, and they're, not putting that data out there on their site anymore. You can get the data in other places, but why do you think they are hiding certain things right now where people really can't see it?
So I've been hearing mixed reports about this. I initially outputted a video about it myself, and we can see that the total Fed assets are still being reported on their site, on the St. Louis Fed site. We can also see that through the SOMA which is one of their other, subsidiaries or whatever, that's being outputted there, but it's not necessarily public information. So I think the total values of what they have, or at least what they're willing to admit, is still being put out there. However, they are starting to discontinue certain things. Hey, they did that with the M3. And we know the reason why. And I do believe that this may be just part of all of this to hide and conceal the truth. Whether or not this is, where it will stop, I don't think so. When we saw the same thing, so I did a video and I got criticized about it, but look at what happened with the M3. They were suggesting it was too expensive to calculate. How idiotic is that statement? Because nobody's believing that. But today we just go about and realize, okay, well, M3 is not important anymore, apparently, because it's not on the website. And it's no different than what George Orwell, so that people did in 1984, how he described basically removing language so that people can't express exactly what they were trying to feel or let's say as a method of control. If that information is not there, people can't use it in order to make their point, essentially. That's what I'm getting at. And I think that this is what's going to happen. Specifically with this, to me, it doesn't really mean too much because they already printed 16 trillion in addition to the 4 trillion. So they're at 20 trillion. Forget about 4 trillion. It's unbelievable.
Now, they also came out with the idea that the yield curve is not a good indicator of a recession now, and they want to change this or get rid of it. And right now, we can see that everyone is reporting on the yield curve, how it's, going to invert, and it's a good signal that a recession is coming back in time. It tells us a recession, is approaching. I mean, why are they saying that this is not a good indicator?
Because they generally like to focus on the fake jobs numbers, the fake unemployment rates, and other silly indicators that are absolutely manufactured. We can see the direct correlation in between the yield curve and recessions. We know that is a fact. Now, I don't think the yield curve causes the recession, but it happens to be a leading indicator. And as far as I'm concerned, there's a direct correlation there, and they don't want to point at it because what I found in my experience is that the Federal Reserve makes a statement, the mainstream media puts it out there, and the financial analysts will then pick that up and actually believe it. I can't believe people in the financial industry believe what they see on television, but I saw it myself on the trading desks. You'll see that individuals will be watching Jim Cramer, and they're literally watching him like as if he's giving real information, as if it's not being bought and paid for. This is how silly people have become. And it's those who were supposedly trusting to do the analysis, to do all of the trading, to do all of this business. And it's a big mistake. The yield curve is something that we should be definitely paying attention to.
What you're saying is true. I mean, they put information out there, and a lot of the data that they're putting out there is manipulated, and it's to push a certain narrative. The Fed has also put out there that the tariffs are going to wreck the economy. I mean, in your mind, why are they also pushing that idea? Because, think about it. They're removing their data from their balance sheet. They're saying that the yield curve is not a good indicator of a recession. And then they're saying that tariffs that Trump is pushing might wreck the economy. Why are they pushing all of this right now?
I think that they are clearly worried about what's coming. You can see that there has been a lot of uncertainty recently in the different markets, whether that is real estate, whether that's the financial markets. Look, we're still at a level below that which we had back in January of 2018. And we're not willing to sit here and actually admit that yet. Still, it's as if it never happened. It's so ludicrous to see people out there saying that the stock market keeps rising. It hasn't been rising. Yes, it did all throughout 2017. There's no doubt. But to say that it's still rising is completely fraudulent. And I think that they are starting to become concerned that despite all of the quantitative easing measures that's going on around the world, they still haven't been able to push these markets higher. So they're going to have to intervene, or this could be time for them to pull the plug.
So let's take this one step further. Now, the bank of all central banks, the BIZ, they're warning that banks might be manipulating their books like Lehman. And, they're saying that, their books aren't really what they're showing and how the bank is really doing. Why do you think the BIZ is actually coming out and saying that banks are actually manipulating their books?
The BIZ, I see it a lot like the IMF. And these two institutions, while they are completely the supranational elite and they have no business really existing as far as I'm concerned, their reports are actually really good. When they output these reports, I'm always looking at them, and they are always generally really pointing the finger at the problem. Their solutions, of course, are terrible, but I really like their reports. It really highlights the fragility of this financial system. So when the BIZ comes out and says something, I actually like to listen. I actually do believe that usually it's pretty accurate. They have an agenda, of course. But what they say, like in this way here, it's no different than what we've been researching all along. They are pointing to the same information that we are.
So, the BIZ is warning us. You think they're trying to, separate themselves from what is about to happen? Like they don't want to be out there saying that the banks are strong, the banks are good. You think they're kind of separating themselves so they can say, hey, we told you about this, when everything starts to fall apart?
It could be. And I also do think that they know what's going to happen and that they lead up to an event and then they have to be there as part of the solution. So I think that could be part of it as well. As far as I'm concerned, there's no difference between the BIZ, the IMF, the World Bank, the G20, and all these institutions. They are all one and the same. So what we get in the end is going to be some sort of, new system that they put in place, and then they will be able to say, oh, look, we told you this was coming, so we've been working on a solution.
So we're not just seeing it from the BIZ, and you mentioned the IMF, they're one and the same. The IMF says they need a rainy day fund for the EU. Why do you think they are out there putting that message out there?
I think that it's quite a joke to suggest this because we've already seen what the central banks are doing. They've intervened at a level that historically has never, ever happened before. They have printed approximately $20 trillion, and I've seen different numbers, depends on what you include. But the central bank balance sheets have gone up $20 trillion over the last, I think it is maybe since the year 2000, it's gone up $15 trillion since the Great Recession financial crisis time frame. That is beyond anything we've seen in modern history. And they say we need a backup fund. Well, what was all that? What was all that money? Where is it? What's it doing right now? So they want a rainy day fund. How big does it have to be? We saw at the World Economic Forum in Davos, they said we need a $100 trillion bazooka. That's the most ridiculous thing I've ever heard because, where does it stop? Why is this system so defunct? Why is it so terrible at its root that we need $100 trillion to backstop the losses? I think we've got a problem right to the core, and eventually that they will have to hold us hostage because of it.
Now, it seems like from the BIZ, from the IMF, from the Fed, and even out of the corporate media, because we see the Wall Street Journal, they already reported that they think the country will be in a recession by 2020. Bloomberg's recession indicator saying that we're going to be in a recession in the next 12 months. From all of this and everything that we've been watching and looking at, is the financial system moving towards this great recession?
There is no way out of it at this point, but so I want to look at it in two ways. We can look at it on the surface level, which is that it's unavoidable. There's too much debt The central banks have been printing up trillions of dollars. They're now in the quantitative tightening mode. That means they're going to be increasing interest rates. We just had the Bank of Canada increase interest rates today. And then we need to go and suggest that there will be more of this coming with pulling back on the balance sheet and so on. That is, in fact, going to cause a collapse. If I look at this through the crystal ball and flip it around 180 degrees, I like to see that all of this is intentional. They knew that printing money and pulling it back is going to cause a crash. They knew that from day one. And the reason that they're doing this today is no different than any other recession before. And that is when you dry up the liquidity, you cause a collapse. And this is why they're doing that. In 2008, they did this. In 2000, they did this. In all previous crashes before, they did this. They dry up the liquidity intentionally to cause a crash so that they can push through new laws, new regulations, favorable taxation. We're talking about bailouts, bail-ins, anything that they want. As long as there's a crisis, they can get it through. And you need a crisis in order to do that. People beg for mercy, and hey, the government's willing to give you what you need. So just let us do this and this. People don't care. They look the other way, and you have something new occur.
So from your research, how do you think this collapse will play out? Do you think the market will come down first, or what do you see happening?
You know what? That's been something that I've been pondering for quite a while now. I don't know what the trigger event will be. I know that we have too much debt. I know that we are in a problem in basically every possible sector in every possible way. It's nonstop bad when you look around, but we still need a trigger event. So back when you saw, the whole subprime crisis, that's really how the derivatives started to unwind again. Now today we don't have quite as many derivatives, supposedly. They're keeping them under wraps, but this may not be the case. It could come from, let's say, real estate. It could come from any country, in fact. Think about this. The entire globe started to unwind because of subprime mortgages in the US. That was like the trigger point. It wasn't the root cause, of course, but that's all it took. I'm looking at Europe, actually, as one of my major indicators there, because there's so much turmoil happening with all the crises that are taking place. When you have the sovereign debt crisis, you have the immigration crisis, you have all of these going on, and I don't see it letting up anytime soon. So we could have a problem in any one of these countries, and that could start to spell disaster for the EU, which then would spread across the world. We could have oil going up to that $100 mark. That's going to be a big, big problem. They say they're going to pump more. That actually doesn't fix the problem because of the importance of oil. You look at what happened during 2008. They could have simply just, 2007 leading up into 2008, they could have, quite frankly, just increased the production of oil. But that's not the way it works. You can't. The governments cannot control what happens to these prices on the surface level, of course. They can't control it. It is, in fact, happening without their ability to manipulate this and say, oh, we'll pump more, we'll take more out. Look at what occurred with oil when it dropped down to $30 a barrel. There was a glut. It appeared out of nowhere. A glut just appeared. And then suddenly, the price shot down to $30 a barrel. Now today it's at, let's say $70 to $80 a barrel, WTI and the Brent. There's no understanding what's going on with prices the way that they put them. All I know is that this could be one of the factors if it gets too high. So there could be a number of things, but I'm watching oil, I'm watching Europe. Of course, the US has big issues itself. In Canada, the real estate is the entire economy. So if real estate decides to fall, that's it. It's going to be game over for Canada. Increasing interest rates, obviously, another big issue there. We can look at China's slowdown that is in fact happening. The actual GDP numbers are probably somewhere around 3 to 4% based on many estimations. So you just pick just take your pick. And of course, we have the conditions where conflict could be heating up. So that's also another issue.
So let's move into, when a collapse does happen, let's say the market comes down, things start to fall apart. Like you said, Canada, your real estate bubble is popping. And of course, that leads into many other industries once real estate starts to fall apart. I mean, are we going to see the same thing happen that we saw in 2008? Are we going to see huge job loss, or are we going to see a credit crisis? Do you see any of that happening?
Any number of things could happen at this point. I do believe that we would have some of the same, because it's still relatively fresh in the business owners' minds. I do believe there will be definite some layoffs, but don't worry, because the temporary jobs will be there to fill in the gaps, and the low-paid service work will be there to fill in the gaps, and the temporary workers provided by the government will be there to fill in the gaps, and there will be no sense of stability for a period of time. We are going to have the potential that asset prices will fall in a deflation at first, but it won't take long for the central bank, in this case the Fed, to ramp up the printing presses yet again. There's going to have to be a time in which we engage in a QE4. There's no way around it. That's going to have to happen. And when they do engage in that, we could see asset prices rising again. But just look at 2008. They didn't respond immediately. So people think, as soon as the prices come down, they're just going to print some more money and my Amazon shares will be fine. That doesn't work like that, okay? They want it to collapse to a level to make things really, really heated, get the debates going, make it look like they're all fighting in between each other in the Congress, and then they pass a TARP bailout. That's going to have to happen. And I think that in a short period of time, asset prices will be suffering before they engage in a hyperinflationary scenario.
I mean, you're saying that they're going to push QE4. Do you think they do have the ability, when everything starts to fall apart, to prop everything back up? I mean, do you think they'll be able to prop the banks up? I mean, they just did a stress test for the banks, and there was a report that there was some type of payoff with Morgan Stanley and Goldman Sachs where they gave them a passing grade even though they failed. Do you really think that these banks will survive this and survive it long enough where the Fed can come and prop them up with free money again?
I think that what could happen next time around is we could have more nationalization occurring, like Fannie Mae and Freddie Mac. So you could see that with some of the banks. I think this would be a great opportunity for one bank to swallow up the others, so that we could have massive conglomerates of banks coming together. You could have a Goldman Sachs, JP Morgan, and Bank of America, and all of these, they just have to come together. We had to do this. This is just, normally we wouldn't, but to save the banking system, we created this super mega bank, and this is going to be the way that we're going to save everything. The assets are all protected by the government. We will backstop any losses. We'll get the Fed out there. They're going to start printing some money. They'll get the stocks to come back up. They can do it. I think they can do it. But ultimately, what's going to happen as a result is more power and control for the governments, as well as, more importantly, the supranational elite.
Now, what about the interest rates? Are they going to start dropping them very, very quickly? I mean, do you think we'll end up in the negative territory with interest rates?
It seems, that's something. In Europe, you could say yes, for sure. But in the US, I think that they'll have to. However, I'm skeptical, because I know that they purposely want to create a crash. So I'm a little bit skeptical. My estimation, based on, I don't give any predictions, but just based on an estimation, the Fed funds rate will max out at about 3%. It doesn't look like it can get any further than that, maybe a little bit. But at that point, they're going to have to start to drop rates. How low they go, well, we'll see how flexible they are. We saw the shadow Fed funds rate, which did in fact go below, I think it was actually -3 at that time. But this year, we can have the actual Fed funds rate coming below, and they could, even Janet Yellen, prior to becoming the chair, she said if it were positive to have negative interest rates, I'd vote for that. So She is actually in favor of that. That means the central banks are in favor of that, and it is only a matter of time. A lot of central banks are doing it, so it's nothing really new anymore, and it's simply a matter of time. Where we'll get to. We have to get to a certain point on the high, maybe 3% on the Fed funds rate or so. At that point, they'll have to start bringing them down. They're always too slow on the way up, too slow on the way down. They're never able to get anything sorted out. It really is a failure if you think of it as if every action they do is intentional.
So you said that the central bank, they want to trigger something and they want to bring it down. Why do you think they want to bring it down right now?
They do so periodically, and they have an agenda where we can see that the big establishments, the supranational elite, the technocrats, they all gather together at things like Bilderberg and the World Economic Forum and the G20 and so on. And together, they like to be able to consolidate power and control in order to have basically this a continued, I wouldn't call it necessarily a tiptoe effect. It's more of like a staircase where every so often they get more and more power. They're doing that. They've been doing it for a very, very long time. Every crisis, they're always getting more power, more control. There are mergers and acquisitions taking place, and we have bigger and bigger conglomerates. The media is owned by just a few companies, and you could look into that more deeply, where you see 147 companies basically own the entire world. This is always the case where it happens after or around that time frame of a collapse or a crash or a crisis of some sort around the world. This is what they do, and they are able to make these leaps in these crisis timeframes.
Do you think when the system comes down, do you think other countries will start to lose faith in the central bank system? I mean, we see the BRICS system, we see Russia, we see China, and many other countries. Do you think more countries will move away because of what happened?
I think so, to some degree. I mean, we can definitely see the alliance going on between China and various other countries, Russia being number one, but China's basically trying to do business with anybody the U.S. doesn't want to do business with, and that's very smart business for them. I definitely see that occurring. You could see how they're setting up the AIIB. They're trying to engage in and build basically the infrastructure, either physical or financial, where they are going around the systems that the West and the US have built. They also are talking about creating their own internet with Russia and everything else. I don't know how all that's going to take place. I mean, we're talking billions and billions and billions of dollars and years of development, but that could be the case. They're trying to, with the petro yuan, they're trying to sort of get around that. It's still very, very early at this point, but it is pretty important to the globe already. So I think that it is definitely the case. Whether or not we're going to see that in the next few years, I don't really necessarily think so. But it's a step-by-step series of events that happens. It's going to take decades before they can really wean off of it entirely.
Do you think the central banking system, are they prepared to move us to a different system when the system comes down, maybe to an SDR system or some other type of system?
Oh, for sure. That has been in the works for quite a long time. That is, in fact, the desire of the technocrats. They really want this, and they will push ahead for it. They need a crisis to do it. So if the crisis is big enough, they can try and push for it. We've had talks of it before brought up, maybe we should have one currency and this and that, but it's sort of just put aside. So I don't know how long it's going to take to get something like that in. All I know is what my thoughts of this are. We would have something like the IMF's SDR, which is already being used today. It doesn't even need to be created. It doesn't need to be, some sort of conspiracy. It does exist already, despite what some people believe anyway. And you can actually have that backing our currencies, our national currencies. So in doing so, you would have the average citizen wouldn't know the difference. But behind that is a system of control. and they're able to manipulate. They're able to say, oh, your deficits are too great. You will have to be burdened in some way, austerity measures, increased taxations, and so on.
So let me just ask you this. If we move to this SDR system, does the Fed lose the ability to create currency like they're doing? I mean, will
Believe that
the dollar still be the reserve currency, or is it now the SDR?
That's something I'm not aware of what they'll do, to be honest with you. I do believe that all the central banks will still be there, and they will probably issue the currency. But I think somehow behind the scenes, you're going to have some sort of supranational entity like the IMF dictating what can really happen. So they're going to be basically giving up control to some sort of higher authority.
So this is the central bank's plan. This is what they want to happen. I mean, unless something else occurs where they can't control the collapse or something else happens, right?
Well, that's really what they've always wanted. I mean, these central banks, we're being told that, the Bank of England, the Bank of Canada, the Fed, and so on are all different organizations. They're all one. They are all one. They're all owned by the same group of people. They are all being controlled entirely. They act in concert, or at least they tell each other, okay, you're going to print the money this year, and then because we're going to stop our QE3 measures. Now, Bank of China, Bank of England, and Bank of Japan, and ECB, and so on, you're going to have to step up your measures here, and we still need to be printing $200 billion a month, and so on. It's all the one unit. I do not believe that they are separate in any way.
Do you really think that they're planning to bring down the system before 2020?
Before 2020, I don't know how it can withstand that long, as far as I'm concerned. At least the governments will have to admit it by that point. It's usually far delayed when they actually do admit it. 2020, I don't mathematically, based on everything I've calculated, it seems to be impossible. I don't think that it will necessarily be too bad this year. I mean, we can have some more stagnation and things. I'm worried about the trade tensions that are occurring that could escalate very quickly and speed up that timeline. But I'm looking more towards interest rates being the key indicator and the catalyst for something worse. So I think that should the Fed funds rate stay below that 3% mark, we can extend that further out. I'm also looking at LIBOR too. If it goes up to its what we experienced before, it still has to come up a couple percent, in fact. So there's a little bit of time left.